Hello, everyone. Ladies and gentlemen, good afternoon and welcome to Punjab and Sindh Bank's Quarter 1 Financial Year 23-24 Analyst Meet. As a reminder, all participant lines will be in the listen only mode, and there will be an opportunity for you to ask questions at the end of the briefing session. Please note that this conference is being recorded. On behalf of Punjab and Sindh Bank, I once again welcome all the participants to the virtual analyst meet. On the panel from the bank's management, we have Sri Swaroop Kumar Saha, Managing Director and CEO, Dr. Ramjas Yadav, Executive Director, and Ms. Mahima Agrawal, Chief Financial Officer. Following the management's address, we will conduct a question and answer session. We have placed all microphones on mute. At the end, during the Q&A session, we will be coordinating for unmuting the participants for asking questions. I will take you through that process before the Q&A session begins. However, the management will continue to remain unmuted throughout the session. I would now request our Managing Director and CEO, Sri Swaroop Kumar Saha, to address the gathering. Thank you, and over to you, sir.
Yeah, thank you, Diksha, and good afternoon to all. I'll welcome you all to this analyst meet on a virtual mode post the declarations of the Q1 results of the bank. With me is Dr. Ramjas Yadav, Executive Director, and the CFO, Madam Mahima Agarwal, and some of our key functionaries at head office. You must have all received the presentation already. Just to mention a few of the highlights of the bank's Q1 results for the current year. The total business had increased at 11.63% to 1,94,525 crores. The deposits increased by 12.49% and stood at 1,14,211 crores. The gross advances of the bank increased by 10.43%, and the advances stood at 80,314 crores. The RAM advances growth has been 19.64%. The RAM percentage to the gross advances has improved from 49.47% to 53.60% on a YOY basis. The gross NPA of the bank has gone down on a YOY basis from 11.34% to 6.80%. Net NPA has moved down from 2.56 to 1.95. The PCR has improved from 88.10 to 88.58. The operating profit was at 257 crores. The net profit declined to 153 crores. The non-interest income of the bank, which was a significant improvement of 54.78% on a YOY basis. The yield on advances has improved to 8.45. The net worth of the bank has increased by from 5,226 crores to 7,213 crores, and the capital adequacy ratio overall basis has improved by 40 bips from 16.79 to 17.19%. And on a sequential basis, our net interest income has improved by 7.89%. The net interest margin has also improved sequentially from 2.53 to 2.63. As far as the other areas of our performance, we would like to say that the bank has also achieved all its priority sector targets. The future outlook in terms of the bank's strategic outlook would be to continue with our capital optimized growth. And then, of course, we will be on the technology side. We will be upgrading our version of the current core banking platform from the Finacle 7 to Finacle 10. That is going to happen very shortly. And we'll continue to focus on on recovery. Our guidance for the year would be above 1,500 crores. The bank would be also looking for hiring more in the specialized areas and particularly for the capacity building on the human resources side. We will continue to focus our strategies to increase our non-interest income and fee income. And of course, on the lending side, we will continue to have a focus on core lending. We have already built a portfolio of 1,000 crores. We'd like to build it further. We have increased various partners, both on the priority sector side and the non-priority side. Our digital transformation will continue to get special focus. A lot of improvements have happened on the digital front. We have brought in new products like DigiLocker, WhatsApp banking. And with the technological upgradation in the core banking solution, we feel that the digital transformation will take a fast forward mode and will continue to improve on it. And with the digital transformation, we would like to go into the digital innovations and improving the process delivery in our various segmental credit, like retail, agri, and MSME. So that process of delivery will also show substantial improvement. And in terms of the increasing the operational efficiency, we'll be focusing on structural changes to improve the operation efficiency, like stabilizing and improving our call center setup. And we are already in the verge of in the process of implementing the video KYC mode. So that will also improve our operational efficiency in acquisition of our SA and CA accounts. Fintech collaboration would be one of the areas where we like to be move ahead very fast. In the presentation, we have highlighted some of the key areas where we would like to have fintech collaborations, particularly in terms of underwriting, improving the underwriting standards, lead management, current account sourcing, auto renewal, and bringing in STP journeys, wealth management, and in that we have already announced that we will be engaging a fintech partner to provide a platform for entering into mutual fund business. So that fintech collaboration, the fintech partner onboarding will like to finish by September, and maybe in the customization in Q3 and implementing on the ground by Q4. And as I said, that our guidance for the overall year for recovery upgradation will be more than 1,500 crores. On the deposit side, we expect to grow of between 8 to 10%. Advances, we intend to grow between 13 to 14%. Gross NPA, which is at 6.80 now, we like to bring it down to below 6%. Net NPA, which is at 1.95, we like to bring it to below 1.5. The PCR, which is at 88.58%, we like to move it towards 90%. The NIM, we are aware that there is a systemic pressure on the NIM. However, we like to improve our efficiency and improve from the current level of 2.63 and bring it to at least level of 2.90. The credit cost we expect to, which is at 0.08% now, will be below 1%. And the slippage ratio, which is at 0.60%, will be maintained at below 1.25%. So that is the overall scenario of our and key highlights of our performance of Q1. Now I am open to the questions and answer session. Thank you.
Thank you, Mr. Saha. So, ladies and gentlemen, when you look at your screen, you'll notice a small hand sign next to your name. If you press this icon, it will indicate that you have a question to ask. We'll go through the participants one by one, and the analyst with a question will be unmuted. Before asking your question, please introduce yourself and mention your organization. If you have joined through an audio call, kindly send your question via WhatsApp to the following numbers. I am reading out the numbers to you, kindly write them down. 9650341218 and 98106059190. Also, if anyone is having trouble sending a direct message to our chat group, then please forward your questions to our WhatsApp numbers. For your convenience, we have provided the WhatsApp numbers in the chat group so you can easily access them if needed. I repeat, should you need assistance during the conference call, please raise your hand on the WebEx panel or press *3# on your phone. Or you may share your questions via WhatsApp to us on the mentioned phone numbers on the chat group. Rest assured, we will make sure your questions are addressed by our panelists. So I can see a question coming from the line of Amit Mishra. You can please go ahead and ask your question. And may I remind you, please introduce yourself first.
Yeah, this is Amit Mishra from Indus Equity Advisors.
Yeah,
Uh,
Mr.
Good afternoon, everyone, and thanks for the opportunity. Sir, my first question is on SMA2 movement. If I see it has gone up significantly as compared to last quarter, like it was 107 crores, and this quarter it's in 310 crores. So, can you elaborate on this?
Yeah. See, what overall, if you see our SMA book above 5 crores, I think that has come down from 446 crores to 370
370.
372 crores, and this SMA2 of increase sequentially from 107 to 310 is a one-off situation for the quarter. We'll be able to manage it in the subsequent quarter.
Okay, but I was asking on a more of that any what was this one-off event? Like
Uh,
why this any particular account is there?
Oh, that's a government account actually. It's a state government
Okay,
account backed by a state government guarantee also.
okay,
So,
understood,
so the
understood.
fund came in a bit late. So technically, it was SME2, which was it was accounted for within 3-4 days also after 30th June. So that's how we technically on 30th June that number came. So
Okay,
that account is around 270 crores.
okay. Sir, next questions on recoveries. So you
Yeah,
mentioned target for recoveries is around 1500 crores, correct?
correct.
Uh, but I think in the current quarter, our recoveries are around 240 crores, around 30
300,
40 crores, correct? 300 crores.
300 plus crores. Yes. Hmm.
Okay, so will we able to reach that target by the end of this year
Yeah, we are
with
confident
this
that
run rate, or this was
yeah.
just one of quarters?
No, 345 crore is what we achieved this quarter. I think we have certain accounts lined up under the NCLT/NARCL accounts. We have some accounts lined up for that. We expect that about 1,000 crores of resolution will happen through that segment. So we can
Okay.
achieve those. And of course, we have a very strong recovery schemes internally on the other than the corporate ones. I think we are confident that we can achieve this 1,500 crores.
Because in last quarter, 1,153 crores for the recovery in March quarter.
Correct. Correct.
So
See,
because
yeah,
of seeing, when I was looking at that
yeah.
number, I think we could have, given a much higher target for recoveries.
That again, you see, at the bank of our size, the inventory of as the gross NPS come down, the
Right.
inventory of the NPA figures also gets drastically reduced. So we had good recoveries last year, including some of that happened in Q4. So that's why we made a overall had a overall recovery upgradation of 2,100 crores in the last year. So if you compare that with that, so we are giving a guidance that keeping in view that our inventory of the big accounts are getting reduced. So that's why we have
Okay.
given a lesser
So now the
guidance.
focus will be on smaller accounts because
Yeah,
the
small
larger
ones,
chunk is already recovered.
the
Okay.
mid corporate ones. Those will be the main focus areas.
Okay, okay. Sir, my next question is on your cost to income ratio. So in this quarter, it has gone up to 72%.
Yeah,
So any particular reason for that? Because I think usually it was around 67%.
correct. That is because the wage impact of the wage provisions that we have started making. 57 crores is what we have provided additionally in Q1 this year. This was not there last year. So if I see from that perspective, the last year Q1 at 69. If you have observed my Q1 last year, the last year's Q1 was at 69 point, I think 25 something, and this year it is at 71 plus. It has increased. It has increased substantially from Q4, but the moot point is that it has not increased too much compared to Q1 last year, and the main impact was due to this wage provision that we have built in.
Okay, got it. Sir, another thing that we mentioned on slide 30 that a target for FY24. So we have mentioned this targeted branch for CASA. So can you explain a little more on this, like in which areas we are going to open these branches?
You're talking of slide number, please. Slide number 30.
30.
Mm-hmm.
So
Okay.
we have given targets for FY24 in this slides, correct?
30 minutes. Huh?
Oh, not 30 actually. It's
I'm getting a mixed up. Where given the guidance for
38, 38, slide 38, 39.
39. That's the guidance for the overall deposits and advances. Yes, yes. See that
Initiative
on
plan
that.
for FY20. Initiative plans for FY20.
Oh yes, 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 yes. Okay.
On that slide,
Yeah,
we have given
we
CASA
see,
Bank office
yeah,
particularly.
absolutely, absolutely. Yeah, now I got your point. Yeah, see, this is where we would like to do some digital transformation in these operational aspects also. So today, what we are having is that we are normally a branches as a brick and mortar branches. Normal accounts are open at the branches. So therefore, we thought that in two ways we need to strengthen ourselves. One is the regulatory compliances need to be strengthened, and there is one aspect. And the other aspect is that our efficiency on onboarding of customers should also improve. So there will be twofold strategy on this. One is, of course, the creation of our back office structure to improve the regulatory norms and other areas of what we need to keep in view on the KYC compliances. The other aspect is, of course, we'll facilitate this back office structure through a tab banking acquisition mode, wherein the branches will be enabled with tabs. We can open the account on a outreach program through a tab with online verifications can happen, and through a video KYC, the operations will get much more smoother and much more efficient as far as the other banks are concerned, as compared to other banks are concerned. So that is what we intend to do through this methodology. So we are designing our program in this, and we'll be able to complete this process. It's a structural change, so we'll be able to complete this process in sometime in Q4 this year. That is what is our estimation. So that is the area. And on the CASA front, I would like to also tell you that, as I said in my submission, that my technological upgradation is in the process of very near to be completed. So I will be moving into a different version of upgraded version of the Finacle. And once that happens, the acquisition of my CASA accounts through the digital mode will get a great boost. We are still doing it now, but there are certain operative difficulties in our older version. So once the core banking comes in an upgraded version, the acquisition mode will also improve. Acquisition velocity will also improve. So that is what we intend to do in this sector.
So by when we can expect this changes in Finacle, the latest changes?
Yeah. So we expect that we are going through, because there are a lot of technological collaboration that needs to be done in this process. So we expect that by the end of early Q4, we should be onboarding the vendors by Q3 and and customize them so that we can implement it by Q4. So we have kept an overall target by Q4 in the current year.
So so majorly effect of these changes will be reflected in FY25.
Yes, absolutely.
Okay. Okay. Sir, my last question is on your customer satisfaction rating. So I know you are doing a lot of changes in your bank on a digital side also, branches also.
Yeah.
So do you have any internal rating to how to check whether customer satisfaction rating is going up or down? Because I believe that customer the key point of banking is to the customer. So that it can elaborate something.
We are losing you out a bit.
I was asking some internal rating. Do you have any internal rating on the customer satisfaction rate? Like, because we are doing a lot of changes in our bank. So are we doing anything on that front?
See, this is yes, it's a very interesting and very important area which we need to enter into, and we are in a process of designing. See, this is all. It is all has to be based on technology. So, though we are at this point of time not having a technical collaboration on this customer satisfaction, but we do some surveys internally. However, once my technology upgradation happens, my digital transformation will happen, and through my mobile app, these such facilities can be given through the mobile app, which we are already in the process. Only thing that we have to wait for the CBS 10 migration to happen, so that is a very important area. So some of the things are put on hold, but it is definitely one of the important areas in which we are looking into. Yeah,
Okay,
and
that's
one of the things where we also monitor is our rating of the unique app. That is monitored very closely. Our app rating is quite well placed. So that is one way of the monitoring we do how our apps are working.
okay. Okay. Thank you, sir. Sir, my one more question to CFO, ma'am. If she can give me any guidance on ECL provision, like how much is bank is going to provide, whenever RBI comes with the guideline. So any impact on our provisions?
Sir, we are aware about the ECL. This time also we are slightly building up the provision. This time also we have we have created some extra provision. So in the future we have assessed that, and we will definitely make the provisions for ECL also, sir.
As you know that the formal guidance note has not come. However, we are building up the book slowly, and depending on our past history, we will be continuing to build this up strongly in the next few quarters. But we are holding substantial provisions on the standard account at this point of time also.
Thank you, sir. Thank you, sir. And all the best.
Thank you.
Thank you, Amit. Mr. Ajmera, you may please go ahead and ask your question.
Thank you for giving this opportunity. Good afternoon, Shah Sahab,
Good afternoon, Mr.
Raji
Ajmera.
and other people there. Sir, while we agree that net interest income and net interest margin has gone up in this quarter, but otherwise, all other parameters, we are a little bit disappointed with this first quarterly results. If you look at, I mean, even from the asset quality also, it is probably the only bank among the results which are published where your net NPA in terms of absolute and gross have gone up. In fact, and even the CASA, which is already very, very low in our bank comparatively as compared to other banks, has a further sleeping. Even in this quarter also, it is slipped. If you look at the profitability also, the operating profit as compared to the last quarter has gone tremendously down, even the net profit also. And sir, if you look at the recoveries, while you are saying the recovery and upgradation, some respectable figure of 345 crore as compared to 1153 crore in the last quarter. But if you look at the recovery from written off account, in a bank like a bank having a business of almost about 1,95,000 crore and a credit of 80,000 crore, 10 crore only from recovery from written off account is a very, very, I mean, negative thing for the recovery department. I mean, what is 10 crore for such a large bank of the recovery as compared to 404 crore in the last quarter of the last financial year? So, and same thing is on the credit front. What we as a bank are doing, I mean, if we are not like in the overall year, it is about 10.5%. But if you look at this quarter, it is negative by almost about 0.8 or 1%. So neither we are going for credit to increase our profitability and put our money for a proper use. Our CD ratio is also coming down. It means we are not utilizing our money properly for the banking purposes, for the loan purposes. So, sir, overall, even though you have given the guidance of 13-14% on the credit and good guidance on the recovery and good guidance on the CASA and deposit, and you are also saying that lot of developments have taken in digital, but I think it is not reflecting. And this is one of the worst. I mean, if you look at the quarter, though I agree that there is some pressure in bank of the and other things. But I think we have to look very, very seriously on some of these numbers. Why we are not going in credit at all? I mean, this has been my point in the last many of the analyst meet. We are a banker. We have to take a call on credit, sir. So really, sir, I would like to hear you on some of these points, sir.
Yeah, thank you, Mr. Ajmer. I appreciate your very, very insightful feedback on my results, on the bank's results, and we acknowledge your concern. But I'd like to highlight a few things which from the bank's perspective. As far as the NPA asset quality is concerned, I'd like to inform you that our gross NPA numbers in absolute has come down along with the percentage. It has gone down from 5648 to 5464. Yes, the net NPA numbers have marginally, absolute numbers have gone up. And I explained that in my various press briefings also, that primarily it was one mid-corporate account which slipped into NPA and we had to book it. It was a restructured account, and that restructured account had to be classified as NPA on a backdated manner in which the account goes directly to D2. So that was one of the areas where if I take that out, my slippages of 450 crores is, if I cut short 100 crores, it is well in line. My slippage ratio continues to be in line with the industry. But yes, your concern is correct that our overall performance in terms of the asset quality can be much further improved. One thing I would like to inform the House here is that we are, though the slippages have been a bit higher than the expectation, we have been able to recover in the July month itself 100 crores of the slippages that have already happened in Q1. So we are really focused on our recovery mechanism, and we expect that we'll be able to contain the slippages overall run rate as we go along. In terms of the performance of the other ratios and the areas of credit growth, you'll also appreciate the point that while the performance overall seems to be a bit of a dampener from you as far as you are concerned, however, I would like to tell you that if you see my overall asset quality of the bank, and if you see the credit profile of my borrowers, you will find that we are also focusing on that part of the story, wherein we are creating a healthy book as we move along. As for a bank of our size, which we really need to be also conscious of how we select our borrowers and do due diligence. If you see from March 23 to June 23, my AAA rated accounts have moved from 58.4% to 66.4%. So overall, and the total A and above has gone up to 99. This is for the NBFC, sorry, 99.9%. And if I look into the overall rating portfolio of my above 5 crore, which is also mentioned in my presentation, if you see the total of BBB and above has moved sequentially up from 56.7 to 58.88. And if I add the government guaranteed accounts in this case, so nearly 87% of my book is now in a much more healthier position. So these are some of the other areas where we are also focused on. Our CASA has gone down, and the CASA, yes, our CASA percentage has been always an issue, and it is an outlier in terms of the lower CASA ratio. But you'll also appreciate the fact that in terms of, if you see the other movement of the other banks, CASA ratio perspective, the ratios of various, in fact, all banks have gone down significantly from between 3% to 4% of the their earlier figures. But that does not mean that we are not focused on that. Overall, my current account is still growing at 11%. My overall CASA is going at 4% plus, which is in line with the industry. We are focusing on those areas, and that is exactly why we are focused, because in today's acquisition mode, if you are unable to give proper, efficient delivery systems, and technology has to be a great, has to be, we have to provide technology for that. So that's why we are moving into the various areas of new methods of customer acquisition, and various enablers like video KYC, tab opening accounts through tabs would be a area where we like to enter into. So we like to inform all of you that yes, though Q1 the net profits were down, but primarily due to additional provision that we had to do for that single mid corporate account. We had to provide for the wage division of 57 crores. So these are one or two areas where we also preloaded some of amount of the aging provisions in Q1 itself, compared which would have been normally would have done in Q2. So we are internally trying to make their balance sheet much more stronger. My capital adequacy has improved from sequentially. I think that is also a strength of a sense of strength, where in the longer term we are looking into building a longer term healthier bank. So while profits is a very important area which needs to be taken care by us in terms of the stakeholder interest, but we also feel that in the longer term we need to build up a strong balance sheet. So we have protected, in spite of the 10% growth plus in the credit side, our sequential, there has been a sequential improvement in our capital adequacy ratio. As far as the recovery in TW accounts is concerned, yes, we will continue to focus on the first quarter has been not of a encouraging performance, but normally on these areas we focus on a YOY basis. If you talk of Q4, normally if you see, the trend is that the bigger resolutions of the big corporate happens at the end of the year. So I don't think it will be fair to, if we compare our recovery in any recovery TW in a sequential basis. The more appropriate would be to compare ourselves on a YOY basis, wherein yes, we were 50 odd crores down in the YOY recovering TW in a YOY basis. So all in all, we are focused in our approach. We have a lot of sanctions in hand. We have over 10,000 crores of in principle approvals in hand, for which will take care of our future credit growth, and we are expediting that process. So I hope that we are very positive and upbeat that we can not only achieve the 13-14% credit growth, we can also surpass it. Thank you.
Sir, point well. Sir, I'm just dwelling upon little more on this.
Yeah, Mr. Ajmera, we have lost you.
Hello, Mr. Ajmera. We cannot hear you. Could you perhaps write down your question in the chat box so I can read it out loud to Mr. Saha? Mr. Ajmera, I'll come back to you shortly. In meantime, you can write down your question in the chat box. I'll move to the next participant in the queue. Before that, might I remind anyone who wishes to ask a question may do so by clicking on a small hand sign icon next to their name.
Okay,
Yes, Mr. Ajmera, please go ahead.
Yes. Yes, please come in.
Mr. Ajmera, can you please accept my request to unmute yourself?
Unmute.
Yes, please ask your question.
have grown in last 8%. And in spite of that, also their gross NPA is less than 1%, net NPA is 5%. So what I want to say, doesn't mean yes, we have to grow of handling the book, but we have banking business. We should look at our credit growth and at
Yeah, Mr. Ajay, we have noted your concern. We'll look into it.
Thank you, sir.
Sure. Thank you.
Thank you, Mr. Ajmera. There seems to be an audio issue. If you have any follow-up question you made, please write it down in the chat box. Mr. Saha, in meantime, we have a question from Devesh from IIFL, and his question to you is that 10.43% growth in gross advances is noteworthy. Can you elaborate on the sectors that contributed the most to this increase in lending?
Yeah, Dr. Yadav will answer.
Yes, I think Devesh, your concern is well taken. But as far as the overall growth, if you see in advances, normally it has two constitutes and two major parts. One is RAM and another is corporate. And our bank is really having the policy focus to expand in the RAM segment. And if I say in the RAM segment, it is 19.64 percentage, which falls within industry growth. And since we are strategically having the lesser growth in the corporate, so it happens so. But as far as this 10.30% of MSME is concerned, in the first quarter, it always remain the slow growth because of so many reasons like their financial things and other things. But in the coming quarters, definitely the growth in agriculture and MSME, both segments, we are having a very robust plan and having also the digital delivery and underwriting system. Some things has already been happened, and co-lending portion and part. Co-lending piece, we are the one, we are moving very fast, and we are already tied up with 6 or 7 NBFC partners. So this both agriculture and MSME is going to be expanded through the co-lending partners too. Yes, Divesh, any more?
Yeah, Diksha, you can take it forward. Have we gone offline?
Mr. Saha, we have our next question from B&K Securities.
Yeah.
The question is that considering the overall economic recovery, how does the bank anticipate the growth trajectory and potential changes in the coming quarters?
Yeah, that I've already spelled it out in terms of the various initiatives by the government of India and its overall focus on capex development in the country. We are also aligned ourselves along with the growth story of the country, and we have given a guidance of 13 to 14% to grow on the advances side, and we expect that this is achievable. And we are very, as I said earlier, we have around 10,000 crores of leads that we are holding with us, so that we can deploy. And I'm very sure that in the coming quarters we will be aligned with that and attain our overall guidance on the credit side.
Thank you, Mr. Saha. I can see there's another question from the representative of DAM Capital. He goes by the name of Pritesh Pump. and he has asked that considering the overall economic recovery, no, sorry, that was a previous question. His question is, yes, his question is that the company's net worth saw a significant increase of 38.02%. What were the key drivers behind this growth, and how does it strengthen the bank's financial position?
Yeah, my CFO will answer this.
Yeah, our net worth has increased due to two main factors. One is the retained earnings, and the second is the reduction in intangible loss in the recapitalization bonds. So both are the main reasons for increase our net worth.
Sure, thank you, Ms. Agrawal. I can see Mr. Ajmera has a follow-up question. Mr. Ajmera, you are on unmute. Can you please go ahead and ask your question?
Yes, sir. I will come on some specific questions, sir. In our note number 8, 9, 10, 11, if we see, there is a restructuring January, February circular 20 of 321 crore. Provision is 50 crore. Then again, resolution COVID outstanding 964 crore. Provision is 125 crore. And then note number 11, the outstanding is 123 crore. Provision is 43 crore. So it is approximately 15 to 20% provision of all this outstandings of around 1,400, 1,500 crore. So where do you actually see this is as per IRAC, it is okay. But if you look at the quality of these accounts, have you made any assessment that how much more loss can be there, or the amount can slip into NPA? To what extent in these 3-4 notes to the accounts, if you look at these accounts?
Yeah, we analyze this on a very granular basis, and we find that during the quarter, there was a slippage of 8.25% from the restructured book, and from the GECL segment, it was 2.31%. So it is not that we are not looking into this, but these are, yes, a restructured book, and we need to really overall we need to be very careful. But the book size as such is going down in terms of the overall restructured book, and as of June 23, my restructured book is now at 2676 crores compared to 3000 in FY22, March 22, it was 3322 crores. So the book size is coming down. And out of that 2676 crores that we have on the restructured book, 928 crores is under the GECL.
So total, I mean, if you look at the provision side, the IRAC provisions required, including on standard asset, how much do we have as a buffer? As CFO Madam was also saying that we have got some buffer already built up for
As of now, we
the
are
credit
approximately
loss.
150 crores of a buffer in terms of the beyond the standard advances that you normally do as per the IRAC law. Beyond regulatory.
Sir, on this credit side, this NBFC credit in this quarter on the private NBFCs is 3,404 crore against 2,968 crore last quarter. So about 430 crore something has gone up. So this NBFC and basically the credit, I mean the overall gross advances have gone down to 80,314. Had this 400 would have been not there, then it would have been another slip. So this 400 crore to which kind of NBFC? It's a private NBFC rated AA or
No, indeed, Ajmera Sahab, these are the good double A rated NBFCs which has been reflecting here.
It has come down,
and it is really it has been come down. It has not been gone up. And in the recovery recycle, they are also having their own recovery recycle, and in the Q2, moreover Q2, Q3, they are also coming out their strategy and then expansion plan, and accordingly it will be happening in Q2 and Q3.
The overall NBFC book has gone up in terms of A and above to 99.9%. And as far as the question on private NBFCs is concerned, the overall outstanding has gone down from 3,404 crores to 2,968 crores.
Thank you, Mr. Saha. Mr. Ajmera, we will be coming back to you towards the end. In meantime, we have other participants in queue waiting to ask their questions. So, Mr. Saha, our next question is from Pallavi Deshpande from Samiksha Capital. She has joined us through audio call and has texted us her question. She wanted to inquire about our 1.98% increase in operating profit. So she has asked that despite a 1.98% increase in operating profit, the net profit experienced a decline of 25.37%. What were the primary factors contributing to this decrease, and what corrective measures are being considered?
Yeah, absolutely right. The operating profit sequentially YOY has gone up by 1.98%. However, the total provisions have gone up significantly due to, as I said, due to one of the mid-corporate accounts which was restructured and become NPA during the quarter, as per the classification of some of the banks. So we have ourselves made that NPA, and that increased the provisions under the NPA category. And more than that, also we had the wage revision of 57 crores, which has been provided for another 57 crores. So which was not provided in the Q1 of last year. So both these 57 and the provision on that slipped account accounted for around 42 crores. So 57 and 42. So that was the number, nearly 100 crores of impact that happened in the net profit. So that was the basic reason.
Thank you, Mr. Saha. Is there anyone else who wants to ask the question directly to Mr. Saha? May I please remind them to raise their hands by clicking on the hand icon next to their name. Mr. Ajmera, I'll get right back to you. Before that, please allow me to ask a question from another participant. All right, Mr. Saha, we have another question from just one second. We are receiving our question. There has been some problem with the chat. I have asked her to send me the question separately on WhatsApp. All right, so she is Prathamesh from Pro Invest Nimriti and has asked that the 4.3% growth in gross advances is noteworthy, and can you elaborate on these sectors that contributed the most to this increase in lending? So this question was already answered by one of our panelists, Smriti.
Yeah, this has been answered also.
Yes. Mr. Ajmera,
Yes.
I have unmuted you. You may please go ahead and ask
Yeah,
your
thank
last
you. I am here
question.
again, but please don't mute me when I'm discussing the point. Sir, now coming to the treasury, our treasury income in this quarter was good at 52 crore as compared to 7 crore of last quarter. So can we get a color on our overall treasury book, AFS book, and our modified duration? And where do you see, like, we expect the RBI to take a pause even this time also in the interest rate? So if it is so, can we have some color on your treasury operation going forward, sir, in the coming quarters?
Yes, this quarter we have been aided by some good things in the Treasury Department. Overall, our portfolio is mentioned in slide number 28. We have increased the portfolio of domestic investments from 45,464 to 49,000 crores. And the HTM book is around 35,000 and AFS book is 13,000, around 14,000. So we are now, of course, the global uncertainties will always have a impact on the treasury book of all banks. But as of now, we are well cushioned. But yes, the yields have moved subsequently from 30th June due to certain international developments. So, but we expect that if the things stabilize, we'll be able to manage the fluctuations of the global yields. As far as your question on the RBI stance, I think yesterday also I've explained that it will be data driven, and overall there are certain inputs coming in terms of food inflation in some vegetable areas. So internationally, the global scenario is also a bit of in a hawkish mode. RBI will be of course closely watching those developments. But we feel that, I personally feel that we are in a situation where RBI will hold on to its rates for one or two more MPCs, and then maybe depending on the data that comes in from both from the domestic and from the international scenario, maybe in a post Q4 or the end of Q4 or post Q4, we might see some changes in the overall RBI stance that at the presently is going on. So I personally expect that the rate should hold on for one or two more, unless and until RBI is actually having much more aggravated data on the inflation side.
Thanks for that, sir. Sir, as per the note number 17, we have one old account of, as per the Delhi High Court order, of 91.33 crore, where our exposure is. And the provision is around 40%, and we have still kept it as standard as per the court order. So on that account,
Mr. Ajmera, we lost you again. Can I answer, or would you like to continue with your question?
Mr. Ajmera, we have lost you. We cannot hear you clearly. Would you prefer to write down your question in the chat box? There is some disturbance in the line. Please allow me to.
Shall I answer now, Diksha, or I'll
Yes, please, Mr. Saha, go ahead.
Okay. So I think the question is quite understandable because it is in the notes to accounts. Yeah, we have one account which is under the which is sub judice in the High Court of Delhi, and as of now we are holding sufficient provisions in that. 40% we are holding, and we are monitoring the account. It is ultimately because it's a sub judice matter. We are really not in a position to comment on it at this point of time, and we'll take a call because this is a potential account which can, in case of a High Court order, or the stay, because we have declared this account NPA. That's what it is. No, account was declared NPA, but the stay order was invoked by the High Court. So, but so that we are building. That's why we are building up this provision in case we have to declare it NPA. Then we are adequately cushioned on that respect.
Thank you so much, Mr. Saha. There is one last question from Karthik from Investec, and he has asked that the RAM advances category saw a substantial growth of 19.64%. Could you shed light on the specific retail, agriculture, and MSME segments that drove this expansion?
Yeah, Dr. Yadav will answer.
Yeah, under this RAM, we have the agriculture growth with very marginally 2.72, but this MSME and core retail, these are the key drivers of this RAM growth. And under the retail, we have the another home loan, vehicle loan, and gold loan. Home loan we grew by 14.68%, while vehicle loan it was 17.76%. And under gold loan, though our base is slow, but it was 43% plus growth. So these are under the retail, and as far as MSME is concerned, we have already built up our co-lending book of over 1,000 crores, and it is going to further expand, and this will include both MSME as well as retail. So these are the drivers.
Thank you, Mr. Yadav. Before we close, we have one last question from Ritika from Ocean Dial, and she has inquired if there is any specific investment or expansion plans in the pipeline that the bank would like to share with the financial analysts and stakeholders.
Yeah, as far as the expansion part is concerned, we will be opening branches and try to reach out to as many districts as possible. Last year we opened up 28 branches. This year we plan to open 50 branches, and we like to reach to those districts where we are not present at this point of time. We're also trying to reach out to the ATM, increase our ATM network to increase our brand and our visibility. So yes, on the expansion side, this will be one of the areas where we like to focus on in the current year.
Sure, Mr. Saha. She has another follow-up question on the strategies and initiatives that the bank has implemented to achieve a significant 12.49% increase in total customers' deposits compared to the previous year's first quarter.
Yeah, see that's how we are planning ourselves. We are increasing our retail base of customers, and what happens is in 22-23 and previous year 21-22, we were unable to garner retail term deposits significantly. So that traction has now started. Though we are still dependent a bit on the bulk side, but what the good point is that the retail term deposits have now started coming back into the bank, and we have now various new products on the current and the saving side, and and salary accounts and various other enablers that we are bringing into the bank in terms of partnerships. So as the partnerships will happen, the entire bouquet of the products will be offered to the customers. As I said, that the mutual fund fintech platform will be another enabler for us. We have increased our we have now introduced the co-branding credit card, which is already now implemented, and we are getting very good response in that. We are now focusing on a lot of bank assurance business. We didn't have a health insurance partner standalone, so that has also been brought in. On the non-life also, we have good partners with us. Life partners, we have increased one. So on the fee income side, the bank is giving a lot of focus, and that's why the overall acquisition of our customers also gets benefited if we have more and more products in the bank. So that is how we are planning ourselves.
Thank you, Mr. Saha. Might I ask one last time to all the participants who have joined us today if they have any question or queries that they need to raise to Mr. Saha? You may please raise your hand by clicking on the hand icon next to your name and on your screen. All right, so I see that all the questions have been answered. So thank you so much, Mr. Saha, for taking up the questions. On behalf of Punjab and Sindh Bank, that concludes this conference.
Thank you. Thank you very much.
And to all the participants, in case if they have any queries, they can reach out to me or my team. Our phone numbers are mentioned on the WebEx chat or the invite that was sent out to you earlier. And we'll make sure to address your queries as best as we possibly can. Thank you so much for joining and have a good evening. You may please disconnect now.